All right, so let's jump right in. Apple's fiscal fourth quarter report for 2024. It's just wrapped up on September 28th. And, sometimes those big headlines, they can feel, a bit like a snack that looks really good but doesn't really fill you up. So we're going to go beyond the headlines, and we're going to dissect Apple's financials, really get a taste for, what's cooking. Straight from Apple's announcement out of Cupertino, they're reporting $94.9 billion in quarterly revenue. That's a 6% bump compared to last year. Diluted earnings per share clocked in at $97. Now, 6% growth, it might seem, a little tame for a company that's, used to breaking records, right? But hold on. Let's not jump to conclusions. These top-line figures, they don't tell the whole story. We need to peel back the layers and see what's really driving these numbers. What do you think?
Definitely. I think sometimes those initial numbers can be deceiving.
For sure. Okay, so let's start by dissecting the revenue breakdown, shall we?
Sounds good.
This is where it gets interesting. We're talking products versus services. That classic Apple, dichotomy, I guess. Products, your iPhones, Macs, all that tangible stuff, pulled in a solid $69.958 billion. That's a slight uptick from the same quarter last year. But the real star, I think, is the services. Apple Music, iCloud, all those digital goodies raked in a whopping $24.972 billion. Now, that's a significant jump, wouldn't you say?
Absolutely. I think it really shows how Apple is shifting, its focus a bit.
Yeah, I know what you're thinking. Is Apple becoming less about the shiny gadgets and more about the digital subscriptions?
Right. It's a question a lot of people are asking.
Yeah, it's a good one. Yeah. But before we get ahead of ourselves, let's see where those dollars are flowing from geographically. As expected, the Americas, still Apple's biggest fans, shelling out $41.664 billion. Europe's not far behind, contributing $24.924 billion. But here's a nugget that I thought was really interesting. Greater China chipped in a respectable $15.033 billion, given all the economic and geopolitical whispers, surrounding that region. That's a number worth noting, right?
Absolutely. It suggests that Apple's still holding its own in a very complex market.
Yeah, I think so too. All right, let's break it down even further, shall we? Product category time. No surprises here. The iPhone is still the reigning champion, pulling in a hefty $46.222 billion. And this is where we start to see those nuances emerge. The growth there, it's slowing down a tad. Macs saw a modest increase, bringing in $7.744 billion. iPads, they took a little dip, landing at $6.950 billion. But here's the category that really caught my eye. Wearables, home, and accessories. Your Apple Watches, AirPods, all those cool gadgets that accessorize our lives. This segment brought in $9.042 billion, and it's been steadily climbing. It's a trend worth watching, wouldn't you say?
Oh, yeah. I think it tells us a lot about how Apple is expanding its ecosystem beyond those core products.
Right. So we've unpacked the revenue picture. Now let's talk about the bottom line. Profitability. Apple's gross margin came in at a healthy $43.879 billion. But here's the thing. It's actually down a bit compared to last year. Operating income, the money they make after covering those day-to-day costs, also dipped slightly to $29.591 billion. Now, this could be due to a bunch of factors, rising production costs, increased competition, maybe even those strategic investments they're making in, new areas.
So it's a puzzle worth piecing together.
Yeah, it really is. But before we get too deep into that puzzle, we need to talk about this curveball that Apple had to handle this quarter. Remember that long-running saga with the European Union over, a pretty hefty tax bill?
Oh, yeah.
Well, the European Court of Justice made a big decision, and it definitely sent some ripples through Apple's financial statements. To understand this, we got to rewind a bit. Apple had been grappling with a $15.8 billion tax bill from Ireland. They were arguing that it wasn't justified, and for a while, they seemed to be winning that fight. But this quarter, the European Court of Justice, they overturned a previous ruling. And as a result, Apple had to swallow a one-time income tax charge of $10.2 billion.
Ouch.
Right. Now, to be fair, this charge was partially offset by a U.S. foreign tax credit and a decrease in unrecognized tax benefits. But still, it's a sizable chunk of change, and it definitely impacted how Apple's overall profitability looks this quarter. So where do we see this in their financials? Well, if you open their consolidated statement of operations, which is, all there in your source material, you'll see that $10.2 billion charge staring right back at you.
It's a stark reminder that sometimes even tech giants can get caught in the crosshairs of these international legal battles.
Totally. But here's where things get a little nuanced. Apple also provides what's called an adjusted net income figure. Think of it like I don't know, a slightly filtered version of their earnings where they exclude that one-time European tax hit. This adjusted figure comes in at $24.982 billion. It's a way for them to say, hey, this European thing was a bit of an anomaly. It doesn't really reflect our, typical performance. Now, this practice, it's called non-GAAP reporting, and it's pretty common in the corporate world. But it also raises some interesting questions, right? Is it a way for companies to present a rosier picture of their finances, or is it a legitimate way to help investors understand, their underlying performance? Stripping away those one-off events that might, skew the picture, it's a debate worth having. And to help us unpack it, I'm bringing in our expert.
What's interesting about this situation is how a legal decision, something seemingly unrelated to Apple's core business, can have such a dramatic impact on their financial reporting. It really highlights how interconnected the global economy is and how legal frameworks can sometimes, throw a wrench into the gears. Now, about this non-GAAP reporting, it's a tool, and like any tool, it can be used for good or, less transparent purposes. On one hand, it can help us investors see through the clutter, understand a company's true earning power, stripping away those unusual events that don't really reflect their, day-to-day operations. In this case, Apple's arguing that this European tax charge is one of those, exceptional items that shouldn't cloud our judgment of their profitability. But, and there's always a but, critics might say that leaving out such a hefty charge is a bit like airbrushing a blemish. It might make the picture prettier, but it's not entirely honest, right? They'd argue that this $10.2 billion charge, it did happen, it did affect their bottom line, and we should consider that when evaluating their financial health. So the takeaway, simple. Don't just take those adjusted figures at face value. Dig a little deeper, look at both the GAAP and non-GAAP numbers, understand what's behind those adjustments, and then form your own conclusions.
That's a great point. Financial statements, they're not just numbers on a page, are they? They tell a story that can be influenced by so many factors, some within Apple's control, some completely outside of it. Now let's shift gears and look at another vital sign of Apple's financial health, cash flow. Think of it like the circulatory system of a business, how money flows in and out. Apple's statement of cash flow shows they generated a whopping $118.254 billion in cash from their operations. That's a lot of zeros, and it's a really positive sign. It tells us that their core business is still a cash-generating machine, which is something investors love to see. But they're not just hoarding all that cash, are they?
No, they're putting it to work. They pumped a significant $2.935 billion into marketable securities. Now, that's a fancy way of saying they're investing in things like bonds and stocks, which can generate returns in the future. It's a sign that they're thinking long-term, betting on, continued growth and a healthy market. And of course, let's not forget about their shareholders, the folks who, own a piece of the apple pie.
Apple continued its practice of buying back some of its own stock and paying out dividends, which is a way to reward those investors and boost the value of their shares. So we've covered a lot of ground here. We've looked at how Apple's making money, where that money's coming from, how profitable they are, and how they're managing that cash flow. But we're just getting started. There's so much more to uncover in these financial statements, and I can't wait to share it all with you. But before we continue with our deep dive, I want to remind you to hit that subscribe button. We'll be back in a flash to explore even more fascinating financial and business stories that, well, you won't want to miss.
So looking ahead, I think the billion-dollar question that everyone's asking is, can Apple services really become their main act? Like, will we see a day when subscriptions actually eclipse, even the iPhone? In terms of revenue, I mean.
It's a fascinating question, isn't it? I mean, services are definitely becoming a bigger part of Apple's, story, I guess. They offer those, recurring revenue streams that Wall Street just loves. And they create a kind of digital stickiness that keeps users in the Apple ecosystem.
Right.
Think about it. Once you're like knee deep in Apple Music and iCloud and, maybe even Apple Pay, switching to a competitor like, I don't know, a Samsung phone becomes a lot more, complicated.
Exactly. And that's precisely why investors are so intrigued by the potential of Apple's services. It's a strategic shift away from just relying on, hardware sales. It offers a more stable and predictable income source.
Right. So let's go back to those financial statements for a second. If you look closely at Apple's consolidated statement of operations, you'll see that their services revenue for the past 12 months has reached, get this, $96.169 billion. That's a huge chunk of their total revenue, which stands at $391.035 billion. And remember, this growth in services happening even as iPhone sales are kind of showing signs of slowing down.
Yeah, and what's even more remarkable is the profitability of services. They tend to have higher margins than, hardware products.
Right.
Think about it. Once those initial development costs are out of the way, delivering digital services like music streaming or, cloud storage it's relatively inexpensive.
It's not like they're cranking out millions of iPhones for every new Apple Music subscriber.
Right, exactly. And those fatter margins from services, well, they could really boost Apple's overall bottom line.
Okay, so crystal ball time.
Yeah.
What's your prediction for the future of Apple's services? Could they really become the company's, main breadwinner?
I mean, it's definitely possible, but let's not write off the iPhone just yet. It's still a powerhouse product with a massive global following. It's not going to vanish overnight. What we're seeing is a gradual shift in emphasis. Apple's building this ecosystem where hardware and services, well, they kind of work hand in hand. They complement each other. And as that ecosystem, matures, services are likely to play an even bigger role.
Right. Now let's pivot back to another interesting tidbit from Apple's financials. Their cash flow, their consolidated statement of cash flows, paints a pretty impressive picture. They generated $118.254 billion in cash from their operations. That's a mountain of cash.
Sure.
What are they doing with all that money?
Well, like any responsible company, they're sharing some of that wealth with their shareholders through dividends and stock buybacks. It's a way to reward those who have, invested in their success.
Right. A little thank you for believing in the Apple magic.
Exactly. But they're also putting a big chunk of that cash back into, their future. Remember that almost $3 billion investment in marketable securities we talked about earlier.
Right.
Well, that tells us that they're looking for long-term growth opportunities. Maybe, acquisitions of promising startups or strategic partnerships, things that can give them, an edge.
So they're not just sitting on a pile of cash like, I don't know, a dragon guarding its hoard.
Right.
They're actively putting it to work, fueling future innovation and growth.
Exactly. And that's a hallmark of a company that's not content to just, rest on its laurels. They're constantly looking for ways to evolve, to stay ahead of the curve.
Speaking of curves, let's zoom out for a minute.
Yeah.
And consider the bigger picture. What do Apple's financial results tell us about the overall, tech landscape?
I think they highlight a couple of key trends that are kind of reshaping the industry. First, the hardware market, it's becoming more and more saturated. Growth is slowing down. Competition is fierce. And consumers are becoming a lot more discerning, To thrive in this environment, companies like Apple, well, they need to find new avenues for growth, new ways to delight their customers.
And that's where services come in, right? They offer those recurring revenue streams we talked about, higher margins, and a way to create, a more engaging and sticky ecosystem.
Exactly. And that's why we're seeing so many tech giants, not just Apple, pouring resources into services. It's becoming a critical battleground for, for future dominance.
So for all of us kind of, watching the tech world, investors and consumers alike, what should we be keeping an eye on in the coming years? What are the key indicators that Apple's on the right track?
Well, I think it's crucial to watch how Apple continues to evolve its services offerings. Will they roll out new services, things that we haven't even, imagined yet? Will they bundle existing services together to create those irresistible packages that offer more bang for the buck? And how will they weave these services even more tightly into their hardware products, creating a seamless experience that keeps users coming back for more?
Those are great questions to ponder. It's clear that Apple is at a pivotal moment. They're transitioning from a company known primarily for its hardware to one that's increasingly reliant on services. Yeah. And how they navigate this transition will have a huge impact on their future success. But before we wrap up this part of our deep dive, there's one more intriguing detail I want to highlight from Apple's financials. It's something that might not grab the headlines, but it offers a fascinating glimpse into the inner workings of this tech titan. Take a look at their consolidated balance sheet, specifically the section on non-current assets. You'll notice an item called Other Non-Current Assets. Now, this category can be a bit of a a catch-all. But in Apple's case, it includes a significant amount of intellectual property.
Yes. That's the secret sauce for any tech company, wouldn't you say? It's all about those patents, trademarks, copyrights, those trade secrets that give them a competitive edge. It's the foundation of their innovation, their ability to create those products and services that people, just can't get enough of.
Yeah, exactly. And it's worth, well, a fortune. In fact, Apple's other non-current assets total over $74 billion at the end of their fiscal year. That's a staggering figure, and it speaks volumes about the value of their intellectual property.
It's a powerful reminder that in the tech world, it's not just about those tangible assets, the factories and equipment. The real wealth often lies in those intangible assets, the intellectual property that fuels their creativity and innovation. It's the brain power, the ingenuity, the ideas that truly drive value.
Well said. It's those intangible assets that allow companies like Apple to, consistently push the boundaries, to create products and services that capture our imaginations and become a part of our lives. It's their secret weapon, the invisible force that propels them forward. So as we move towards the final leg of our deep dive into Apple's financial performance, I want to leave you with a thought-provoking question to ponder. How do you measure the value of innovation? It's not always easy to, quantify, is it? It's not like counting iPhones on a shelf or tallying up, subscription fees. But it's the engine that drives growth, creates jobs, and shapes the future we live in. So the next time you hold a sleek new Apple product in your hands or explore the latest feature in their services, remember that behind those shiny gadgets and intuitive interfaces lies a vast and valuable network of intellectual property. It's the unseen force that's propelling Apple forward, the fuel that keeps their innovation engine, humming.
We'll be right back to wrap up our deep dive into Apple's financial performance and discuss what it all means for you. Don't go anywhere.
Welcome back to our deep dive into Apple's fiscal fourth quarter results for 2024. We've, explored their revenue streams, their profitability, with that European tax decision, even how they're managing that mountain of cash they generate. But now let's bring it all home. What does this all mean for you, the listener, the investor, the consumer navigating this crazy tech world?
That's the big question, isn't it? We can, spend hours going over these financial statements, but at the end of the day, it's about understanding the real world implications for people like you.
Exactly. So let's start with the investors out there. What are the key takeaways from Apple's Q4 performance?
Well, I think it, kind of underscores a fundamental investing principle, diversification. Apple's an incredible company, a true innovator, but even they're not immune to challenges, right? Remember that European tax ruling?
Yeah.
It's a reminder that even the most, seemingly invincible companies can be affected by unpredictable events. So for investors, it's crucial to spread your risk, across different assets and sectors. Don't put all your eggs in one basket, no matter how tempting that basket might look.
It's like that old saying, don't bet the farm on any single horse.
Right.
Even the strongest thoroughbred can have an off day.
Right. And it's also a reminder to go beyond those, those attention-grabbing headlines. Dive into the financial statements, understand those underlying trends, the factors that are, driving performance. Don't just chase the hype. Do your homework and make informed decisions.
Now let's shift gears. Think about the consumers, the people who, use Apple products every day. How might these financial results affect, their experiences?
Well, I think we can expect, a continued focus on services from Apple. They're clearly putting resources into this area, and that's likely to translate into, richer, more engaging experience for consumers. Imagine enhanced features for Apple Music, expanded iCloud storage, maybe even, entirely new services that we haven't even thought of yet.
It's kind of exciting to think about the possibilities, right? Apple has a knack for anticipating what we need before we even know we need it.
Absolutely. And as those services become more, sophisticated, more interconnected, it's going to create an even stickier ecosystem for Apple users.
Right.
Which isn't necessarily a bad thing, as long as Apple continues to prioritize user experience, innovation, and value.
Right. It's all about striking that balance between, a compelling ecosystem and respecting consumer choice.
Absolutely. And finally, let's, consider those broader economic ripples. Apple is a global giant. a true force in the tech world and their financial performance? Well, it has a domino effect on the economy. Their success, creates jobs, fuels innovation, and contributes to economic growth, well, around the world.
It's amazing when you think about that vast network of, suppliers and manufacturers and retailers and developers that are all, tied into the Apple ecosystem.
It's a testament to the power of technology, to create opportunities, to connect people, and to drive progress on a global scale.
So to wrap it all up, Apple's Q4 results offer a fascinating glimpse into the company's, evolution and the forces shaping the tech landscape. They're navigating a world of, slowing hardware growth, fierce competition, and those ever-evolving consumer demands.
And they're doing it by, doubling down on services,
Sure.
leveraging their intellectual property, and rewarding their loyal shareholders. It's a complex and dynamic landscape, but Apple seems to be well-equipped to handle, the challenges and seize those opportunities.
It really does. And that brings our deep dive into Apple's fiscal 2024 fourth quarter results to a close. We've covered a lot of ground today, explored a lot of numbers, but I hope you've walked away with some valuable insights and a deeper understanding of, this company. And if you're hungry for more insights into the world of finance and business, hit that subscribe button. We're here to help you, make sense of the numbers that matter and the trends that are shaping the future. Thanks for joining me on this journey.